Yeah, so carbon pricing, when I talk about the politics, that's really where the rubber hits the road on the challenges politically. We did actually have a carbon price in Australia before it was subsequently removed by a new government coming to power. Um, the carbon price at the time did actually reduce carbon emissions, and it was the first time in the trajectory of carbon emissions, in terms of actual emissions, had turned down, and that was during a period of strong economic growth as well. So the carbon pricing, however, was removed and very much tied up in the politics, and we had a PM that we lost a PM over that episode. And so I don't see any prospect. Rather, whilst I do see a prospect of Australia committing to a net zero 2050 target, I don't see carbon pricing as the mechanism to get us there. I just don't see that being the policy choice of this government or any government, whether right or left. I just think it's become politically toxic. So the way I see it working is more around subsidy and targeted support and corporate level ambition translating into demand for green energy. And I think we're looking at more like an enduring green value, which would reflect the ambitions of both state governments and large corporates to decarbonise. So they're setting their own 2050 net zero ambitions, and they need to then take action to meet those ambitions. So they're going out to market, increasing the demand for green energy, and that, we believe, is already today creating some residual green value. And so we think that's more likely the mechanism via, for example, RE100 to support green energy deployment. So that's really where our thinking is going, rather than carbon pricing in Australia. So in terms of the green value of these credits that we see in the market today, we do already have a green certificate mechanism. It's related to the 2020 renewables target, which in Australia was a green certificates mechanism. And the certificates are called large generation certificates, or LGCs. And they have some residual value with some carryover opportunities for retailers. It was a retailer obligation. And so there is some residual value in the vicinity of $20 to $30 a megawatt hour as a green value. We see that falling away based on the current mechanism, but that mechanism extends out to 2030. So those LGCs will continue to be traded between retailers and generators out to 2030. And the thinking is that additional or incremental green energy demand could actually reveal itself in the form of demand for these credits. And if the credits were then backed with corporate level recognition and accreditation, then we could start to see the demand for green energy be facilitated via an existing tradable, bankable mechanism that's already in the market. So we do have some tools in place which could be adapted relatively easily to reveal that green credit value. And obviously the value beyond 2030, I mean, if we're looking at a net zero 2050 trajectory, then the whole power sector needs to decarbonise by 2035. So that green value could be quite significant, especially if Australia becomes a net exporter of green energy, which is the expectation.